Good evening and welcome to Finance Pulse. Tonight, we are tracking everything from China's new warnings to Washington, to Wall Street's AI spending spree, and Bitcoin's sudden drop. All leading up to a deep dive on the Supreme Court battle that could redefine global trade policy. Here are the top headlines of the day. China is sending a clear message to Washington: don't cross the red lines. After President Donald Trump and Xi Jinping reached a fragile trade truce, Beijing has warned that for peace to hold, the US must avoid four sensitive areas: Taiwan, democracy and human rights, China's political system and its right to develop. China's ambassador to the US, Xi Feng, called these issues core interests, urging Washington to show respect if it wants stable ties. While the truce temporarily cools tensions between the world's two largest economies, the underlying disagreements, from military posturing to tech restrictions, remain as sharp as ever. The AI arms race is heating up, and big tech is all in. Amazon, Alphabet and Meta have all hiked their capital expenditure forecasts for 2025, signaling billions more in AI infrastructure, while Microsoft surprised Wall Street with higher than expected spending in its first fiscal quarter of 2026. Analysts say this surge shows that even if we are in a market bubble, the AI rally may still have room to run. Investor enthusiasm for data centers, chips and machine learning models continues to fuel tech stocks, with AI seen as the next great productivity revolution. The question now is, when does innovation turn into inflation? And in crypto, it's red week across the board. Bitcoin dropped to just above $104,000, down nearly 3% in the past 24 hours and more than 8% over the week. Most altcoins mirrored the fall, reflecting what analysts describe as a wave of leveraged long liquidation. Market sentiment has turned cautious and global uncertainty, with risk-off behavior spreading across equity and crypto markets alike. Still, Bitcoin remains one of the best performing assets of the year, a reminder that volatility cuts both ways. Now for tonight's deep dive. Trump's global tariffs are heading to the Supreme Court. Tomorrow, justices will hear a landmark case challenging whether President Donald Trump overstepped his authority by using emergency powers to impose sweeping tariffs on countries around the world. At the center of the case is the International Emergency Economic Powers Act, or IEEPA, a 1977 law that allows the president to regulate imports during national emergencies. Trump used it to justify reciprocal tariffs on trading partners including China, Mexico and Canada, saying they were needed to protect US industries. But critics argue that Congress never intended the word regulate to include imposing tariffs, and that no president before Trump has used this extraordinary law in this way. Adding fuel to the controversy, Trump declared two national emergencies this year, one over the influx of fentanyl, another over the US trade deficit, to activate those powers. Lawyers challenging the move say the trade deficit declaration stretches the law's definition of emergency beyond recognition, especially since Trump's own order calls the deficit persistent, not sudden or extraordinary. If the court agrees that Trump misused his authority, it could strike down the tariffs altogether, a decision that would shake the foundations of US trade policy and cost billions in collective duty. On the other hand, if the justices side with the administration, it could open the door for future presidents to impose sweeping tariffs without congressional approval. Former US trade official Ryan Majerus told AFP the court might seek a middle ground, upholding some reciprocal tariffs, while limiting others tied to weak legal justifications like the fentanyl emergency. In short, tomorrow's ruling could redefine the limits of presidential power in global trade, and with it, the balance between Congress, the White House and America's trading partners. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.